GMS Bazaar for giving me an opportunity to talk on a very interesting topic called as GIFT City. And I'm sure from the morning you would have heard GIFT City many times. And you actually would want to know why GIFT City is actually the way you should invest. As NRIs, you have many options to invest through Singapore structures, Cayman, Mauritius, DIFC, ADGM, all type of different investment products. So the idea of the session today is maybe over the next 20-25 minutes, discover a little bit more about GIFT City, what makes GIFT City at par or maybe superior to some of the jurisdictions we discussed, and maybe a little bit our vested interest to introduce a couple of products to you as well. We have a stall there at the back. So I'm going to show you a little bit about GIFT. If you can answer some questions at the stall, maybe you'll get some exciting prizes. So the idea is to just keep you awake on discovering GIFT. Yeah. So maybe to make this session interactive, all of you would have heard about GIFT. Can anyone tell the full form of GIFT City? Yeah, please. Gujarat International Finance. Yeah, Tech City. So GIFT City stands for Gujarat International Finance Tech City. It is India's only approved IFSC, or simple words you can understand as India's only approved central SEZ, which gives a lot of incentives for investors. So it's a free trade zone which provides tax incentives and allows for flow of capital. I think what you have also seen is in the recent few years, idea is not to cover GIFT City only for investments. So you have heard about airport leasing, ship leasing, and many other activities which they are trying to set up in the GIFT. In fact, interestingly, all of you must be knowing that India is trying to bid for Olympics 2036. India is also trying to bid to get Formula One back to the GIFT City, to India. And both of this, if we can get the bid, the idea of the government is to try and get it in the GIFT City. So idea is GIFT City is at the moment how DIFC was maybe in 2007-8. Over the next 5-10 years to make GIFT City quite sort of large. In India, there are 4 regulators. Can anyone name the 4 regulators, please? Very simple one. RBI, SEBI, IRDA, one more. PFRDA, right. So PFRDA, these are the 4 regulators in India. RBI looking at banks and NBFC. SEBI looking at all capital markets entities. Then you've got IRDA, insurance, and PFRDA as pension. Beauty of India is no regulator talks to the other regulator, right? So banking KYC doesn't work for mutual fund doesn't work for insurance, and so on and so forth. Sorry, jokes apart, but you know that it always takes time to get all the regulators on one page. Good part about GIFT City is there's only one regulator, one unified regulator governing everything from banking to investments to insurance to pension. And that regulator is called as IFSC, and it oversees all the sort of activities in the GIFT City. In fact, in the 20 years of experience that I've had in the capital markets, I have not seen a regulator as friendly as GIFT City. They call us every month, come with a notepad and say, you guys travel across the world, tell me ways that we can make life easy for investors and asset managers, right? The other sort of regulators are umpires and tell you, stop, don't do this. Or there is every Friday a new circular coming telling you how you should do your business. Here the regulator's idea is to be more collaborative, to hear feedback from investors and asset managers and partners to feel how they can make GIFT City sort of big. So most friendly regulator, and regulations in GIFT, I tell you, if you heard the earlier panel, approval of GIFT funds is much faster than many of the funds, including DIFC, ADGM, Luxembourg, UCITS, etc. Maybe not as fast as Israel, but funds are getting launched in maybe 3 to 4 weeks or 6 weeks. So regulations are moving very fast. Second interesting part, though GIFT City is technically located between Gandhinagar and Ahmedabad, from a FEMA perspective, GIFT City is considered a jurisdiction not in India. And when I say a jurisdiction not in India, it means if you want to transact in the GIFT City, you have to transact in a currency which is not rupee. So you can trade in multiple currencies, including US dollar, dirham, pound. You can deal in Aussie dollar, Canadian dollar, multiple countries, 15 currencies are allowed. Interestingly, INR is not the medium of exchange in the GIFT City. So when we were setting up our branch, and we were trying to send laptops to our branch, we had to fill import and export requisition forms. Just tells you that within the same sort of country, which is India, GIFT City is considered not a part of India. And that is very important for you to understand because it makes transacting in multiple currencies very easy. Third and most important is tax, right? I'm a Gujarati and always look at net returns or how you can make it returns efficient. One misconception people have is that any product launched in the GIFT City is tax-free, right? So India gets capital from various countries, right? Singapore, Dubai, Mauritius, Cayman, etc. When they were starting GIFT City, the idea was why should an Indian manager be seated in Mauritius or Dubai or Singapore? Why we are helping those economies and not helping our economy? Why should the manager not be based in India? And the best way to attract people back to India is to make it efficient. So on taxation part, taxation of GIFT is at par with all the jurisdictions we mentioned. There is no doubt on DTA and other aspects, which can happen with any other country like Mauritius and others. So GIFT City gives you complete ease of taxation. And there are few products, including ours, which can give you completely tax-free return. I think if you remember the olden days, we had an EEE regime, which is exempt, 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 right? Some funds you can launch in the GIFT City are EEE sort of structure, which can be exempt at all 3 levels. And maybe I'll share that at the end so that you all remain interested till the end of the presentation. On the GIFT City, what type of funds you can launch? So you can launch family investment funds, you can launch AIFs, you can launch ETFs, mutual funds, etc. At the moment, all of you have seen only AIFs being launched from the GIFT City. What you will see is during this year, a lot of retail mutual funds and ETFs also be starting from the GIFT City. So now you are doing 1,000 rupees SIP in India in mutual funds. Hopefully, you can do $1,000 SIP through the GIFT City as well, right? So this is something which is evolving, and we are also trying to work on retail mutual funds and ETFs, and because we have a retail mutual fund license in the GIFT to do all types of activities. This is a typical structure of a GIFT product. So you have foreign investors, could be NRIs, foreign nationals, foreign companies, could be any of that. There is a fund which has a trustee, an independent trust structure. There is a fund management entity. And what can the GIFT City do? GIFT City can essentially do 3 things. One, all of you know, can invest in Indian securities, Indian bonds, Indian ETFs, real estate, etc. We heard the earlier panel on that. GIFT City also provides access to global stocks, global ETFs, global real estate, etc. Lot fund houses have not started this offering. We are starting with this offering as well. And third, GIFT City will also give you flexibility of investing in securities which will be listed in the IFSC. So what the government and IFSC are working is cross-listing of securities across exchanges or fundraising across exchanges. So like a Swiggy gets listed on NSE, BSE, eventually it will be also listed in the GIFT City, and it will be listed like an ADR, GDR in dollar terms. So as an NRI, you can start buying securities in dollar terms through the GIFT City. So you can buy foreign securities, Indian securities, and securities listed in IFSC. So it gives you flexibility of doing sort of all asset classes within the GIFT City. Now I know in this room there are a lot of direct investors, a lot of advisors. So maybe we'll take a few seconds for you to tell, as investors or as advisors, what are the challenges you feel are there when an investor wants to make investments into India? And then let's see whether GIFT City can give you a solution for all the problems. Can maybe you highlight some of the challenges NRIs face when you invest into India? Sorry? I couldn't hear you. Capital gains, tax. Yeah, absolutely. You're like me, Gujarati, tax first. No? Permanent, PAN account, PAN number, excellent. One more. PAN number is like KYC, I can take. Repatriation, absolutely. Third, one more. Devaluation. I am sure everyone in this room is only concerned about मेरा dirham का क्या होगा. ठीक है? Four challenges. And these are the challenges I had written before, which is KYC, documentation, taxation, tax filing in India, remittance and repatriation, and currency. So let's give an answer to all the four. And if we are able to convince you, hopefully you will invest in GIFT City and in GIFT City in our fund, but let's make you sort of comfortable with GIFT. So first, who can invest? Any NRI, any foreign national or any foreign company can invest in the GIFT City. Only thing is it has to be an FATF, sort of not blacklist country, which is North Korea, Iran, and Myanmar. I don't think so you'll find investors in those countries who are positive on India maybe, and you cannot do neighboring countries of India. Second is KYC or PAN. So as per IFSC, PAN is not a mandatory document to invest through the GIFT City. First and most important. Idea is to attract foreign nationals to come and invest into India. And if you want foreign nationals to invest into India, you can't say you need a PAN number. So PAN is not a mandatory requirement. What you need as an ID or an address proof is simple. Mutual fund KYC is not required. So if PAN is not mandatory, Aadhaar of course is not mandatory, right? It's very simple. If you have a PAN number, you can quote your number. If you don't have, just say no PAN declaration. What you need is an ID proof. So you'll have a passport, that's it. And maybe as an address proof, you can give passport or any of the documents, driving license or a utility bill. And that's it. That's the only sort of documents required. What we've done in our sort of product is to create a digital onboarding journey. So you don't need to fill physical papers and do this. Completely digital, and only two sort of documents are required. And PAN, as I said, not a mandatory requirement. Now bank. Money can come from any bank account in the world, Bank of Singapore, Bank of America, ADCB, ENBD, FAB, whichever bank you want. You can transfer money. Only you cannot transfer money from your NRO account, right? FCNR, NRE, or any foreign bank account is there. Because you transfer money from any foreign bank to GIFT City, you can take back the money without any questions asked. So repatriation and remittance is not a challenge. Third, taxation, right? And the most important one, taxation. So people think in the GIFT City, any fund is tax-free. So any fund which is launched, even in DIFC, Mauritius, anywhere, when it invests into India, they take an FPI license. And when you take an FPI license, you will pay short-term tax of 20%, long-term tax of 12.5%. So funds which are launched in the GIFT City, which has underlyings as shares, your tax remains 12.5% and 20%. However, if your underlying is not shares, your underlying is mutual funds, then you move to the EEE regime, and I'll tell you why. All of you know that mutual funds are a pass-through vehicle, so when a mutual fund buys and sells shares, mutual fund doesn't pay tax. So that's the first level. Second is the liability of a retail or any investor in a CAT 3 AIF is at the fund level, not at the investor level. So the tax liability moves from investor to the fund. And hence you have to now only consider, does the fund need to pay a tax? So if the fund has underlyings as mutual fund units, maybe if you see the highlighted part, which is dark black, which is maybe the fifth point, there's no gains on any security which is non-equity in nature. So mutual fund units are also considered as a non-equity instrument. And hence, if you buy a feeder fund where the underlyings are mutual fund units, then there is no tax. You don't need to submit a TRC, no need to give a 10F form, no TDS will be deducted. And thankfully, in the GIFT City, investing in GIFT City is like you are investing in a UCITS, Luxembourg, Singapore product. And hence, tax filing is also not required. Okay, so no, the income tax authorities don't want to know your tax or your investments, because first it's your dollar investments and your liability doesn't arise in a GIFT fund. and hence no tax liability. A lot of NRIs, when I talk like this, they say, yaar, ye to abhi bol rahe hai, future mein government will change the policy. We don't know what will happen in the future, but the idea is to attract foreign nationals to come. And if your idea is to attract foreign nationals to come, you have to keep your regime constant. In fact, in our fund, 20% of the money is already in foreign nationals. So I don't think so they will reverse this sort of call. Fourth is sort of currency. So currency risk will never go off because you're taking a view on India, right? So whether you come through US, Singapore, any other structure, if your underlying is shares of India, your currency risk remains. Only thing that GIFT City helps you is the conversion risk of converting from dirham or dollar to INR is mitigated because that is done by the fund. And instead of you paying the bank, say maybe 1.5%, the fund gets it at a very low cost, maybe as low as $10, which is 0.01%, which is charged to the fund. And hence, currency conversion risk is mitigated to a large extent. But currency risk still remains and will always remain, even if you invest anywhere. I can see maybe 3-4 minutes left. So let me quickly just dwell on what we are doing at Mirae in GIFT City. So maybe these are a couple of the events. This is a GIFT City event which was there, which had all the global leaders along with the PM, Finance Minister, RBI Chairman, etc. And we were the only asset manager there in the GIFT City at that event. And that's because we started our operations in GIFT as a mutual fund manager in 2023. We've taken a retail license in the GIFT City, which allows us to do retail mutual funds as low as even $1,000, which we hope to launch this year. We're already managing India mid-cap fund from the GIFT City, close to about $300 million. And we have launched one fund feeding into Indian mutual fund schemes already in the GIFT City. And we are launching next month a fund which will allow you to invest into global ETFs as well. So it will allow you to do sort of both activities. So when an NRI or any investor wants to invest into India, typically two questions: which market cap to invest and which theme to invest or sector to invest. When we launched our first product, which was the India equity allocation, idea was simple: in one product to give you a complete solution of India. I know few of the asset management companies have launched products. One has fed into only mid cap, one is feeding only into large cap, some is feeding only to flexi. Our idea was, why don't we give you complete exposure to India, and that too dynamic. And hence we've created a quant sort of model which dynamically runs every day and tells you appropriate allocation to large, mid, small based on valuation and momentum factors, considering 1 year forward sort of market multiples. And if you see, there is a pre-decided range of large, mid, small. So market caps are between 80 to 100%. Themes can be up to 20%. And we had bought consumption and manufacturing, two themes I think you've heard throughout the day as themes that we had also invested in our fund. Our fund has been live for more than about 6 odd months. It gives you flexibility of investing across market cap themes very, very dynamically. And when we backtest this sort of performance, underlyings are all Mirae Asset schemes, which you would have seen track record of about 10 years, 15 years, with size of about 20,000, 40,000 crore in size. Some of the funds are fairly large. So the fund is able to give you over a long period of time about 5-6% alpha. Alpha has been on two elements. One, the fund actually delivering the alpha. And the second is the allocation shift between large, mid, small, giving you sort of that alpha. Second fund which we are launching, say next month, is a global allocation fund. So it will have core allocation. When I speak to all NRIs, most easy answer is, why don't I invest only in US? So our idea was to keep core allocation to US. So up to 70% is core, which is US. And instead of taking NASDAQ, which is only tech, we've taken S&P as sort of the underlying. And the 30% is more tactical, where we can invest in AI, blockchain, semiconductor, etc., which are the themes that we would like to invest in. So Mirae Asset globally has about 500 global funds that we can choose from. We've chosen 4 strategies that we feel can give you sort of better experience. So core, which is developed US, and tactically between semiconductor, AI, and blockchain. And sort of the returns, of course, of US has been sort of very, very large. So maybe last thing, and closing it, I can see 30 seconds left. Why GIFT City for NRI? First, Ease of documentation. Ours is a completely digital onboarding. Tax efficient way of investing. Our product is EEE, tax efficient, zero tax liability here, and in your country as well because it's tax free. Our fund moves between large, mid caps, small caps, tax efficient, no liability at the fund. Funds can be transferred from any foreign bank, no repatriation risk, and you can invest in dollars, and currency sort of risk can be mitigated to a large extent. So with that, maybe I'll end my session for today. And thank you for being a very patient audience. And please join us at our stall in case you have any queries. Thank you.